Let's talk about the simplest day trading strategies on earth, the simplest day trading strategies that you can use. Hey, it's Coffee with Rob. Let's have some coffee. Always good. For those of you who don't know me, I'm Rob, and for those of you who do, welcome back. It's good to have you back on board. Today, I'm going to take you to the charts. I'm going to show you the simplest day trading strategy, swing trading strategy, or the simplest strategy that you can use to make money in the market. But let me say, there's a difference between the word strategy and system. So I'm going to show you the system first on the charts. I'm going to show you the system that'll give you that high probability trade, and then I'm going to take you after the charts and I'm going to give you the strategy that's going to make you money in the market, that's going to turn you into a profitable trader, or at least a break-even trader, because I know right now you're probably struggling to make a profit in the markets. We'll do that almost immediately. But while you're here, guys, drop down, get your free Forex book, and also get your Funded Trader account down there. Join as a member for Trade of the Day every single day. Let's go and have a look at the charts, and then when we're done with the charts, I'm going to show you a trading strategy to die for. Let's go for it, guys. Here's the charts. We're going to show you the simplest way to trade, the easiest way to trade in the market. Don't forget, guys, the market's risky. Most traders lose money, and if you're unsure, you probably shouldn't even be trading. Don't trade if you're not sure. There you go. That's as simple as it gets. Right, how do we trade? The simplest way is with support and resistance. That's a resistance that we've drawn in. Now, how do I draw that in? I'll normally go to the day chart, I'll pick it up, I'll put that resistance in. We get a resistance, price gets into that resistance, it fails at resistance. I put a trend support in, it breaks the trend support, boom, that's a short, we're going short. When we see a big red candle, it's going short. That's how simple it is to trade. But let me show you how we get to that. Let's show you how we work out where support and resistance is on any one product. Now, this is gold. Let's just see what we've got here. Very much a trend. There's a nice trend support. Let me just find something a little bit more useful for you, something that you can actually look at that's not so trendy, but we can do it on the trends as well. It really doesn't matter. But here you go. Here's the US dollar, Canadian dollar. Now, what I'll normally do is I'll go to the day chart. So firstly, we go to the day chart. So there's the day chart. And I look at the day chart and I see that this is an extremely bullish instrument. It's going up, going up, going up, going up nonstop. Then it gets here and it creates what I call a flag. Flags normally resolve to the upside, but the flag is a bit of a range and it's trading in that range for now. But every single trade that I really want to take, I want to take long, because at the end of the day, this is very bullish. It's a flag. It'll probably resolve to the upside. Then what I do is I look at my trend and I say, okay, we've got a bullish trend. Let's draw it in on a line chart. Why do I use a line chart? The reason I use a line chart is because the line charts close on closing prices. These points are all on closing prices. And I want to get my levels off of closing prices. I don't want to get my levels off of highs and lows from the candles. So there's your closing prices. So this level is now what we would call our trend support. There's your trend support. Right on the points there. Lovely stuff, lovely dovely. So we've got a trend. We've got a trend support running through here. Now we know if it breaks through that trend support, it's short. If it stays above it, it's long. Then here's your closing prices. What we've done is we've drawn in a resistance level, a daily resistance level. Now, why do I go to the daily to pick up the resistance level on the higher time frame that I'm trading, because I'm trading on the H4, is because it's more reliable. The higher you go with the time frame, the more reliable this information becomes, because there's more traders in the room. There's more money in the room trading these levels. Then we've got a resistance, a support level at the bottom, a support level on the daily. That's a strong support level. Now we know where the support level is. Now all you've got to do, take it back to the candles. And why do I trade on the candles and not on the lines in the first place? Because the candles, I can see the red ones are going down. I can see the green ones are going up. Don't change the color of the candles, guys. Trade on colors that are recognizable to your brain, because you're trading long and short. It really doesn't matter what color your candles are, as long as your brain recognizes it immediately. So for me, I prefer the red and green. If I see a red one, I know it's going down. If I see a green one, I know it's going up. If I see a long candle, like a long tail like this, I know all the sellers got back into the market on a bullish candle. So it went all the way up, came all the way back down again. Quite interesting. Now, what I do is I go back to the H4 level because I'm trading on the 4-hour chart. And now I've got a bigger picture of my 4-hour chart. If I'm trading on the 1-hour chart, then I'll go back to the 1-hour chart. I just want to see where we stand. Now I'm looking for a trade. If I was looking for a trade, see all these areas here where it came out with a green candle, came out with a green candle, you go long. Now it goes long, hits the resistance, comes back down. Goes long, hits resistance, comes back down. Every single time it comes out of there, you want to go long. But now the trend support has broken through here. So now you don't want it to go through the trend support. If it goes through the trend support, it's starting to look a little bit weak and it could be going to the other side. But it should stay. But the closer this trend support gets to your main resistance and the more it stays above it, the closer you are to this breaking through the resistance and heading to the upside. If this breaks through the resistance and gives you a green candle, it may come back to retest and then go up, or it'll go straight up and go to the moon. That's what happens with these trades. Same goes here. US 500 broke to the downside, came and took some money here, now starting to go up again. These areas of resistance and support and demand are all areas where there's money, where there's orders lying. And that's what you're looking for. You're looking for that liquidity where those orders are lying. The trends, similar thing. It's going up in a trend where you've got 3 points, you've got a nice trend. So here, this Aussie dollar, US dollar was down, down, down all the way. It was a bearish market. It broke through the trend resistance to the upside, giving you a signal to go long. It's gone long. Now it's coming back to retest. This is an area we've put in place. We've added this in just to see if it's changing structure and going to the downside. As long as it's staying to the upside, staying above that, then it's still going long. Aussie dollar, Canadian dollar is another good example. At this time, it hit resistance. It failed at resistance. This is a daily resistance. It failed at resistance. You see it's failed here. It's come back through. It's broken back through. But not only has it broken back through the main resistance, it's also broken through this little trend resistance. This we put in on the 4-hour, broken through this little trend resistance, showing us that it's changing structure. And if it's changing structure, there's a good chance that that's going to go short. Now, if you take a short here, you draw another line across here, it breaks back the other way, then you know it's time to get out of the trade. It's going long. That's as simple as price action trading can be. Just use the trend resistance, the trend support, or the trend resistance, the trend support, the main daily resistance, the main daily support, and that will help you with winning trades. You can also add supply and demand. I do have videos on my channel that'll show you supply and demand as well. But don't overcomplicate your trading. Don't put too many lines on your trading. Just use the strategy that I'm going to show you now after the charts. Now you've seen the charts. Now you know a system, a high probability trading system, a system that'll actually make you money in the markets, a system that you can actually trade with. It's amazing how many people don't realize that there's a big difference between system and strategy. So now I'm going to give you the strategy that's going to turn you into a break-even or profitable trader rather than a losing trader. The first thing you have to understand, though, is that the market's not made up of squiggly lines, systems, algorithms, and maths. The market's more subjective than you would actually believe. In fact, the market's 50-50. And I get so much flack for saying that because so many people think that the market's not 50-50. So many people think that a win rate makes them money. So many people think that squiggly lines make them money. Maybe they've never seen another trader. I don't know. But the whole point is that the market's made up of traders. And traders are human beings. And those traders, they're not bots. They're human beings. Those traders, every single last one of them want to make money. They all want to make a profit. Whether they've invented a bot to trade for them, or whether they're trading manually, they all want to make a profit. They all want to make money. And they all believe that they've got the best probability and the best system on earth to make that money. Or maybe some of them have seen the light and they actually have a strategy. But every single one of them believes that they can beat you. Same as you believe you can beat them, because when I tell you that 60 to 80% of traders lose money, you're probably going to say to me, nah, well, you know, I'll be fine. I'll get through that. I'm not one of those 80% that lose. Day traders, guys who trade on 5-minute charts, 99% actually lose money. And you'll say, now I'll take my chances. I'm not part of that 99%. I'm the 1%. Because every single trader in the market, every single one of you believes that you're going to be more profitable than the other guy. Otherwise, you wouldn't be trading. Who gets into trading to lose? I don't know anyone who gets into trading to lose money. Or do you know so? I don't know anyone like that. I'll be quite straightforward and say, I don't know anyone at all that will get into trading to lose. That tells me that the market's subjective and the market's 50-50. It's got nothing to do with algorithms, maths, or the whole point of a high probability trade on those charts that I showed you now is because humans are habits of nature or repetitiveness. The nature of a human being is to do things the same over and over again. We're repetitive creatures, so we're routine. In other words, if you see movement on the chart and you think it's going to repeat itself, it's not because of some kind of algorithm. It's not because of some kind of system. It's because human beings have done that before, and in all likelihood, they're probably going to do it again. If you don't believe me, if you think that charting is the only thing that makes you money, if you think that algorithms and maths are the only thing that make you money, why is it when the Fed chairman stands up and talks about the economy in the US, the markets either go flying up or they go flying down? Is it because the mathematical algorithm made it do that? Or is it because a bunch of human beings said, ooh, that sounds tricky, let me sell all my shares? Now that you've thought about that, let's get on with the strategy so that you'll have a better understanding of how to make money in the markets. And now that you know that it's real human beings, perhaps now you'll understand why you need a strategy and a risk management strategy to make money. It's Coffee with Rob. Can't miss out on a sip of coffee, guys. Can't miss out on that. Always good. The strategy is simple. The strategy is this. Take the size of your account. What size is your account? $5,000, $25,000, $100,000. Now, the point of my strategy is, and even my system, by the way, is that you can trade this on any time frame. You can trade this on any instrument in any part of the world, in any place, at any time. Doesn't matter. It'll work for everything. You don't have to concentrate on one instrument, and you don't have to concentrate on one time frame. You can do whatever you like. The point of time frames, though, is I like to trade on the 4 hour because it's more relaxing. I can leave my trades in, and the information that I get off the charts is that much more reliable. Because you have to remember, if you're trading on a 5-minute time frame or 1-minute time frame, the information's insanely unreliable. Why is that? Well, let me give you this example, and I did it on the live show the other day. And that is, if I took 5 traders, put them in a room as a test scenario, and said, trade this system and see how it goes, and 3 won and 2 lost, I'd be like, oh, that's a really good system because 3 out of 5 guys won. If I took 10 traders and put them in there, and 6 guys won and 4 guys lost, I'd be, well, that's a 60% win. That looks really good. But then if I took 100 guys, put them in that room, and 80 of them lost, then I would only have a 20% win. But I got a bigger amount of test subjects in the room doing the test. So what do you think is the most reliable result? Clearly, the most reliable result is the one with 100 traders. Come on, guys. It's not that difficult. It's not rocket science. The market is subjective, and it's all about the mentality and the approach of the trader. It's how you approach the market that makes all the difference. It's not the system that's losing or winning you money. I know you've been on a course, a really expensive course, and these guys have taught you that if you trade with this system, you're going to have a 60 or 70% win rate. And those guys who know me well will know that I'll tell you a win rate is a whole lot of rubbish, and it's got nothing to do with anything in the stock markets or the Forex markets or any other markets for that matter. You can throw your win rate in the dustbin. It's a waste of time. What's the point of having a win rate if you're not profitable? You can win 8 trades out of 10, but if you win 8 trades out of 10 and you make $100 on those 8 trades and you lose 2 and you lose $1,000, that puts you at a net $900 loss with an 80% win rate. How does that work? How is that ever going to make you rich? Sorry, guys, not going to work. I'm not a win rate fan, as you can see. Let's get to it. Let me show you the strategy because I'm really been rambling on here and you're probably thinking, when's this guy going to get to the strategy? Well, here you go. I'll get to the strategy right away. The strategy is this. You take the size of your account and you risk 1% of that account. Now, it doesn't have to be 1%. You can use 2%. You can use 10%. You can use 0.5%. It's totally up to you. I just use 1% because it's a fair amount. Let's say you have a $100,000 account. So a $100,000 account says for every single trade that I take, I need to risk $1,000. And if I lose 10 trades in a row, I lose 10% of my account. I still got 90% of my account, don't I? 1% of $100,000 is $1,000. How do I work my trade though? And here's the thing, you've got to keep the risk the same on every single trade. You can't change it from trade to trade. Say, no, I prefer that trade to that trade, so clearly I can risk more on that trade than that. That doesn't work, guys. You've got to risk exactly the same amount in every single trade, because the basis of this strategy is to make more on your wins, lose less on your losses. Really simple at the end of the day. So here's the thing. Let's say you and I, we want to make a profit on that. We pick a trade. We say, ooh, that looks like a lovely trade. I'll take that one. That's the trade for me. But I want to risk $1,000 on it. Nothing more, because I've got a $100,000 account. Now, if the account loses and drops to 80,000, don't start risking 800. Just keep risking 1,000. Or if it goes up to 150,000, don't start risking 1,500. Keep it on 1,000. It's a $100,000 account. And I always recommend to traders that you should actually take your money out of the trading account and put it into your bank account where it's safe. Now, you have $1,000 risk to work out. How do I work out the size of my trade? So I've picked the trade. I like that trade. It looks good. It looks like it's going to go long, right? All I got to do is go and say, where would I put my stop loss on this trade? Because every single trade needs a stop loss, every single one, because that's your $1,000 risk, right? Where would I put my stop loss? Well, I'm going to put it below the lower lows, whatever, an area where I believe that if the price gets to that area, that trade is invalid. It is no more. It's worthless if the price gets there. Because if the trade goes into a loss, number one rule is you don't dollar cost average. Number two rule is when it gets to the stop loss, you take the stop loss. Why? Because you might remember I just said that you chose an area that's an invalidation area. So why on earth, if the price gets to that, would you move the stop loss away? Why would you do that? The trade's invalid. Why would you move the stop loss out? You take the stop loss, you move on to the next trade, because the basis of the trade is this. Out of 10 trades, you should, in all high probability, lose 5 and win 5. It's like tossing a coin. But the point is this. You want to win 2,000 on each of the ones that you win, and you want to lose 1,000 of each of the ones that you lose so that you make an overall profit at the end of the day. It's called risk to reward. It's called making more on your wins and losing less on your losses. So you work back from that stop loss. You say, well, how much is $1,000 back to my cost? How many contracts, lots, whatever can I get here? How much can I buy of this particular product? And then you say, oh, I can buy 20 lots here, poof, and then it's $1,000. Where's my reward? Now, you can't just put reward anywhere you like, willy-nilly, and say, I want to make 2 to 1. I want to make $2,000, so I'll just put my target up there. Knowing that the price is never going to reach it, well, then there's no point, is there? You got to choose a point where you know the price can get to that by looking at previous history, what other traders have done in the past, that the all likelihood is that the price will actually reach that point at some point in the future, sometime soon. So now you've made your target price. That has got to be a decent amount more than the $1,000 you're losing. You can't be risking $1,000 to win $50. You can risk $1,000 to win $1,500 or to win 2,000 or 3,000 or whatever the case. You want to put your take profit in an area where you know it can reach it, but it must be making you far more than the $1,000, preferably 2 to 1, so $2,000. It's making $2,000. It's a great risk to reward trade. Now you can take that trade and off you go. Now you've got a trade that says you're going to win 2,000 if you win, you're going to lose 1,000 if you lose, and you're not going to touch it. Yes, you are going to touch it. Because what you're going to do is when the trade goes up and it's $700 or $800 in profit, that's a lot of money. And you're going to be itching to take that profit. I know you. You're going to be sitting there going, I want to take this profit. Because being in a profit is far more difficult than being in a loss. We all know this. But don't take the profit. Sit in your hands, or at least throw a brick on your fingers or something. I don't know. Just don't take the profit. But what you can do is take the stop loss, move it up to break even, or $100 in profit. There are many cases where the price will come back, take out your stop loss, you'll be in profit, and you'll be a bit disappointed because you would have not made all that money that you were going to make. But it's funny though, when you're in a loss and you dollar cost average and it comes back and it breaks even, you don't say, phew, I didn't lose all that money. But when you're in a profit and it comes back and it takes out your stop loss at break even, then you say, oh, I lost all that money. You didn't. You didn't lose anything, because you never closed the trade. The trade was open. What you're doing is you're looking for that big one to follow. So you move it up, and now the trade's costing you nothing. You must remember, initially when you took this trade was costing you $1,000. It was costing you $1,000. Now it's a free trade. So whatever happens, this trade is now completely free. Trade moves up over $1,000, start heading up towards your target. You take the target, take that stop loss and you move it up to $1,000. Now you're in a sort of one-to-one with your stop loss, what your stop loss was, and you're in profit. So if it comes back and takes out your stop loss, you actually make $1,000. When it gets up to the $2,000, you don't click take profit. You move the stop loss right up behind it, and then if it comes back and takes it out, pretty much made target. Now, if you are able to do that and you teach yourself to be able to follow your wins and follow your wins up, then eventually you can teach yourself to add to the trades while they're going up instead of adding to the trades when they're going down. In other words, you can dollar cost average upwards instead of downwards. There's always that possibility. But now you have a system which gives you a possibility of becoming profitable. So you've got this strategy now that says win more on my wins and lose less on my losses. You don't need to win 5 out of 10 trades to be profitable on that. In fact, you need to win 2 or 3 and you'll actually be profitable on your trading. You'll be surprised how it works. Forget about win rates. Forget about how the systems are making you win or lose. They're not. They're high probability trades. You do need a high probability system to be able to succeed in the market, because you don't want to choose losing trade after losing trade after losing trade. I mean, you don't want to throw a dart at the chart and say, "Oh, I'll buy." You kind of want to take an informed decision trade. Like, look at that looks good, I'll buy it. Or look at that, looks good, I'll sell it. You want informed decisions. You don't want just pie in the sky, because the so-called win rate, the so-called high probability, will help you in the long run to choose the right trades and go in the right direction and get those bigger wins that you need. But you have to understand that you're going to lose. You have to get it around your head that you're going to lose on many, many occasions. And once you understand that, once you get your head around that, once you get over the fear and you get to understand that the market's not an objective place, it's more subjective than you could possibly believe, then you'll understand that you're going to be able to make a loss in the market and you can become profitable in the market. So guys, don't forget to go back and watch the last videos. Come back for the live shows. Till the next video, have a great weekend, and I'll see you back on Monday again. Cheers, ciao, and bye.
I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up. I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement. I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement. Everything I do so instinctive and so passionate. Every word I move